Okay, looks like we're live now. Just gonna go ahead and drop a tweet real quick, and then we can get started.
Sounds good.
All right, so let's go ahead and kick this off. Today we're back with another live stream with someone that's building something really interesting on EigenCloud. I'm here with John, the founder of Nunchi. So I guess we'll go ahead and jump right in. Do you want to give us a quick introduction to yourself and also what Nunchi is?
Yeah, sure. Great to be on, and thanks for having me. So at Nunchi, we're building perpetuals exchange for yield. We call these yield perps. And so what we've seen is this shift, right? So we've watched yields become the most important primitive in crypto. I think players like Athena, Pendle have proved that demand. The next step is to build an exchange for that yield itself. And that's what we're building, right? So basically, we see this as the yield layer of the internet, and it's a hyperliquid native exchange where you can trade yields easier than you can trade a token.
Amazing. Okay, cool. So I guess to go back a little bit in terms of how Nunchi was started, can you kind of go into a little bit of that, like in terms of you being the founder and how the company got started and the challenges that you were trying to solve? Was it always this, or was it something else and you kind of moved into this?
Yeah, so definitely what we've seen, that yields are volatile, opaque, and not so tradable in crypto. That's been something that's been true for like 10 years now. So my background was in TradFi trading loans, where you basically are just trading rates, right? And you're hedging these rates and fixing them from floating to fixed and back and forth whenever you need to. And this is a whole piece of traditional finance that is not available on chain in an easy way. And so that's kind of where a lot of this has converged from my background. In terms of the problem that we're seeing, right, it's been this way since the beginning. And now that yields, are kind of the more important thing. And as this next cycle begins, people see that funding rates, staking rates are other real economic signals in crypto demand. And so that's what we're building for, right? So you can speculate, you can short, you can hedge, you can build structured products on these yield perps.
Very interesting. So I guess in terms of the user experience, we can dive into that, like what that will ultimately look like on the app layer. But it sounds like you're essentially providing like a higher quality UX and abstractions on top of just interacting with these different DeFi primitives that maybe we weren't able to have in the past.
Yeah, I mean, definitely. So, I mean, just with Hyperliquid, HIP3 lets anyone deploy perpetuals exchange pretty much instantly once you've hit the mark. And we use that to build the markets that people have never traded on before, right, on chain. So instead of like an ETH price perp where you're trading the token price, on this exchange, you can list ETH yields, T-bill yields, funding yields, staking yields. So these are the things that not just institutions and treasuries care about, but basically anyone that has exposure as a farmer or as just a yield strategist on chain.
And where do you see the market for this? Like, how large do you see the market being for something like this?
Yeah, so I mean, I think there are a couple of ways to look at it, but definitely looking at the volumes and TVL that Pendle has done, the amount of yields that have been paid out by Athena, and just the leverage and revenues and all the value driven by Hyperliquid itself. These are kind of the points of reference for us. And so, we think that things that happened like on 1010 and even more recently throughout the last half of November kind of highlights the need to have some type of risk management, especially when leverage is involved. And so we think that, thinking about this is that you could potentially not have had like a 1010 or big liquidation events if things were hedged properly.
Got it. So hedging is probably one of the top use cases in terms of users that might kind of take advantage of something like this.
Yeah, absolutely. And that's where the work with Eigen has come into play. I mean, I think originally we weren't sure what we'd do. It was just Ditto DMing me. And then we realized that there was this whole opportunity to take kind of this paradigm of, walled gardens / like set up structured desks providing hedging services to, having a set of operators actually maintain verifiable hedges on chain. And so this would be like a first, right? So it's not super easy to hedge on chain. A lot of everything is done off chain. with structured products, especially in crypto like ETFs, etc. But this provides a native way for DeFi traders, treasuries, everyone who has some stake here in the whole crypto industry to hedge that interest rate risk efficiently on chain.
That makes sense. That seems like a really obvious use case in terms of taking advantage of something like EigenLayer, essentially providing, like, I would say, almost the Web2 type of UX with on-chain primitives in general. So I guess, like, in terms of how you all are going about building this, do you want to talk a little bit more about that? Like, are you taking advantage of, I believe, maybe some of the redistribution slashing mechanisms of the protocol?
Yeah, absolutely. I mean, the whole point of this is that it's economically incentivized to monitor these hedges, and so yes, there's all types of actions that could be taken to maintain a hedge on behalf, and so things like slashing, like to miss to basically it de-incentivize people from not keeping the hedge correctly, the people being operators of the AVS, and even working with additional risk curators who want to use this infrastructure to deploy strategies. I think this provides a layer across, not just the traditional operators who have been maintaining stakes, but also these guys who have been major players in DeFi in general and are looking for more medium risk, less high risk, high yield type of products to offer.
So I guess if someone's wanting to use this in the future, do you kind of see it integrated into these other products that you can kind of have the hedging built in, or do you feel like someone would go to a separate place to hedge against other, I would say, investments and things that they have going on?
Yeah, so I mean, I think that in terms of our user experience and UI kind of principles, is that single click hedges is definitely the goal here. So instead of going multi-venue, which is what most crypto participants do anyway, we do want to make it so that for the simplest intro to a user, that they can do this just in one click. And so what that means is that you're participating in a hedging system where people are taking positions on our yield perps, and then receiving a fixed rate via the AVS integration. And so in this sense, like, it's very, very useful. Like, fixed rates exist in TradFi. Most people have experienced these, say, like in the house that you're living in or the apartment. But in crypto world, it's not something that's native. And so, and this is the first time that this can be natively done.
So what type of products do you kind of see being the most widely, like, used on something and with something like Nunchi?
Yeah, so we definitely think that borrowing lending has been the big thing this cycle, and a huge yield generator for farmers. So in that sense, like, our borrowing rate perps, I think, are a perfect launch type of market to go with these types of AVSs. So in that sense, like, right, you have your vaults, you have your looping strategies, and all of these are pretty much exposed to borrowing rates. So you look at the utilization rate to look at what the interest rate's going to be on your loaned or on your supplied or borrowed assets. So with this type of product being offered, these vault strategists, these risk curators, and even people who want to build their own structured products can actually offer some type of fixed rate rather than just a promise for a high return and the potential for it to drop.
That makes sense. So I guess in terms of where you all are going to be headed, I guess, over the next 6 to 12 months, and actually where you are today, you want to kind of talk a little bit about this current state of the company and where you plan to be in the next 6 to 12 months?
Yeah, so for this AVS integration, I think we'll be entering the testnet for that in the next few weeks. And so, using the tech you guys have built, we think that we can deploy this, ASAP for people, especially as we enter the next cycle. In terms of where we are, additionally, we have, 7 million plus in our liquidity vaults that have gone live as pre-deposits, basically, that would supply, liquidity for these types of trades, whether that's T-bill yield trades or funding rate trades, and then soon borrowing rate trades. That's a pretty big milestone, I think, for us, and shows that there is real demand that wasn't just already proven, by Athena, by Pendle, in general.
And the people that are kind of depositing this early, what type of yield or return are they expecting? I'm just curious. This is kind of interesting.
Yeah, so I mean, in terms of expectations, it is a stablecoin vault, right? And those have done pretty well over the cycle. A place to deposit stables and earn on it.
Hmm.
Recently there have been some pretty good returns on the vault due to the risk management by Hyperbeat, and they're pretty anti-cyclical in the sense that you get high returns when things drop on some of the perps across the market, especially like prices dropping. So those have been around like 10%, and up to, and so that's just APY being earned before the markets even go live, right? And then there's Pendle integrations and other things you can do with it when it comes to YTs and PTs.
So what is the timeline looking like, you think, for mainnet?
Yeah, so I think we'll be ready for mainnet essentially probably first time in January of next year. So multiple launches for mainnet products between now and then. But we consider the full mainnet once we have these types of hedging products and everything ready to go in a one-click fashion.
Okay, nice. So I guess after mainnet, what would be the current like focus for go-to-market in terms of user-facing applications, and like how can someone participate and start earning yield or hedging their existing bets?
Yeah, so we'll have an interface, and then when it comes to these yield perp markets, you can see them in. You'll be able to see them in the Hyperliquid terminal itself, and
Mm,
any of the builder code applications that are doing a bunch of numbers right now. So you can go look at like Based. You can look at TradFi, and a number of others who even like MetaMask and Phantom have added these perps to their applications. So distribution's pretty wide. User experiences are across the board. And so, we're taking that into account, especially as we enter this testnet phase, where we'll let users come in and give the feedback on that.
very cool. So I'm kind of curious around the Hyperliquid, like part of this. Is this something that they already kind of offer built in, and it'll automatically just be your product supported there once you go live, or is it something you have to talk to the team about to kind of get in there?
Yeah, so we are doing this through at least the first vault that will go live is the one that's live right now, the pre-deposit vault on HyperEVM. And so this whole thing interacts with Hyperliquid L1 through Core Writer. And so in that sense, you don't actually need it. It's all permissionless in that sense.
Hmm,
So, very much DeFi aligned.
nice.
And so yeah, like I think that this is a first of its kind. Like we're definitely seeing like a convergence of like the big Ethereum stakers with, Hyperliquid itself, which has traditionally only had HyperEVM as like the main thing. So yeah, I definitely think that this is something pretty big for Hyperliquid and Ethereum. And so, yeah, looking forward to being able to offer these products though with this type of infrastructure.
How has the experience been so far building on the Hyper EVM? I've heard mixed things.
Yeah, so I mean, I think that as it's come into its own thing, there've been different like phases on the S curve, and so I think there's layers to it, and I think that you can really do whatever you want. It is a Hyper EVM, right? It's EVM compatible, so I think there are a lot of interesting apps that are yet to come, especially like builders who are still in stealth mode for Hyper EVM itself. So yeah, I think that there is a future.
Yeah, I haven't done anything directly on the EVM, but I've used their API and their SDKs, and it's been really, really nice. Like very, very nice to work with. Probably the smoothest trading experience I've ever, seen by far. So that's been pretty cool. So I guess another question is like, if you weren't to use EigenLayer for something like this, what would be the other techniques that you could kind of use to achieve what you've tried to achieve? Would you have to build out like a separate protocol, or?
Yeah, I mean, you either build something that's basically just like EigenLayer to have the verifiable trust and hedge, or you do what everyone's done in the past, which is where you get some type of deal with a structured desk, or you are an MM yourself, and you set that up, and then your hedges don't necessarily have to be on chain; they can be off chain with whatever assets that's follows your hedging strategy that you laid out. And that in that sense, like it's not so crypto oriented to do that. It's kind of like these hybrid fi structures. They do keep everything kind of opaque on chain. which is not great for users and I think long term.
Yeah, totally. Okay, that's very, very interesting. Okay, cool. So what is there anything else that you wanted to dive into or touch on before we start wrapping things up?
Yeah, so I mean, I think that just in general, like thinking about what this looks like in the next cycle with fixed rates is definitely something that takes a while. I think to think about in the sense that what type of users come on chain through that process, and so we view it that like just in APAC alone, there's like 300 million off-chain users that use centralized exchanges, and so there's only a fraction of those actually in DeFi and in crypto on chain. So I think the next cycle is defined by how you get those types of users, who aren't like huge, yield maximizers in the sense of like looking for those 40%, 50% yields on chain. They're looking for something that's better than their bank account, but also isn't as like high risk as just like going long a token on spot or going long with leverage on perps. So we think that like basically our work with Eigen, like this is the way to service those types of users, which is where we can grow, total on chain, not just liquidity, but also, active daily users.
In terms of the monetization for your company itself, where does that come into like place? Because I know that there is obviously a lot of like discussion around revenue, and this is obviously a product that probably generates revenue. Yeah, I'm kind of curious around like what you're thinking in terms of sustainability for your company. Will there be potentially a token launch, or are you thinking more about building this more just like straight up like revenue generating business?
Yeah, I mean, I think that it's important, like anytime you want to build something sustainably, to look at what the revenue is and what it looks like from those types of metrics. So, I mean, the perps have made the most money basically in the past cycle. I think there are lots of reasons for why that happens. But, fees are adjustable on perps. And so, like, there's ways to, like, hit growth, and then there are ways to just collect revenue basically. So, I mean, what I'm saying is that basically our market will be fees on these perps. And, basically putting that together creates a pretty sustainable business in and of itself. But I would say that, our main focus is making sure that, these yields are fair and that these yield markets are fair. And that, not just like our ABSs and not just our own MMs are the ones, generating and like receiving value from them.
So, where is your company located, and how many people that you have working with you at the moment?
Yeah, so we're definitely distributed. We have team members basically across the world. Some of our co-founders are in South Korea and Seoul. Others are like New York, across Britain, Europe. So we definitely have like a global presence. And so yeah, I mean, we're a smaller team, but looking to grow.
Very cool. Okay, awesome. Well, if someone wanted to learn more or keep up with what you all are doing, like what are some good resources for them?
Yeah, definitely. I'd say like primarily our docs, so docs.nunchi.trade. And then, we have most of our announcements on Twitter, which is where you can get to our Discord, where we have a number of community events and different channels there, and do like community AMAs there as well.
Okay, awesome. I'll drop the banner here. So docs.nunchi.trade.
Yeah, perfect.
And then for your X account, it's just at Nunchi, Nunchi.
Yep.
Yeah, cool. Awesome. All right. Well, before we wrap it up, is there anything else you wanted to touch on, before we end the stream?
No, I would just say that, Eigen has been super helpful in building this protocol, from the very beginning, just getting the cold DM. And it's been pretty amazing what we've been able to be building together since then. So I just want to say thank you, thanks to you and everyone there.
Thanks, man. No, we're excited to be working with you all. Looking forward to mainnet next year. And, if there's anything we can do, always just hit us up.
Sounds good. Thanks, man.
All right. Bye, everyone. Thank you.